The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good morning, folks. I'm going to take care of a little business here before we start the charts. We need to have a moment of silence for Jim Henson, the creator of the Muppets. Yesterday, I could not believe my ears when I heard that Miss Piggy was divorcing Kermit. And I could not believe that the producers of this thing for children pulled a gimmick like that. I mean, it's not enough for little kids 3 to 6 years old to have to worry about things as they get older, but they certainly don't have to worry about the divorce word while they're at that age. I know 51% of all marriages don't make it, but to me, that just sounded un-American. So I just was, it ruined my day, to say the least, but I couldn't believe it. Anyway, that's how it goes. We had a rite of passage in our family yesterday. My 15-year-old grandson is a lifeguard at Pismo Beach in California. Those of you that have ever been there, it's one of the largest expansions of sand dune beaches. It is the largest one in the West Coast, and it's really quite spectacular. And Chase had to go out to the Pismo Beach Pier and jump into the ocean, and it's 40 feet high, the height of a 4-story building. After he got into the water, he had to swim with a 50-pound sack 1 mile across the bay to the other pier in order to make this rite of passage to become a official lifeguard. This is his second year, and he is an excellent swimmer, as you can imagine, but for him to do that was really really quite amazing. And his poor mother, she told me she was absolutely, her legs were shaking when he jumped off the pier, but everything went well. Okay, I just couldn't believe that Miss Piggy and Kermit broke up. I remember watching that with my kids so many years ago, but that's the way it goes. We'll see how the world handles it. Now, the first chart that I posted in here is a graph basically from one of our subscribers. It was nice enough to forward his explanation of astrology, and basically what it shows is that each of the signs going from Pisces all the way through the rest of the signs of the zodiac, basically it's showing, that whether it's Aries or Pisces or Leo, which I happen to be, and we're in the sign of Leo right now, it says the stars and planets will not affect your life in any way. And that's probably pretty much true. But anyway, we try to look at the cycle dates on some of these things and see what's happening. Now, I wanted to bring out a couple of things that I think are relatively important. They might not be after we go through another few months of this, but we have such a deterioration in breadth in the market like nothing I've ever seen before. I really don't understand how the market can even rally a couple of days, given the fact that the breadth statistics are just absolutely horrible. To give you an example, if we take a look just at yesterday, give me 1 second here. There we go. And we'll do the advanced decline line and the high lows, and you'll see that even with this big up move that we had yesterday, we still had more decliners than advances, and we made more new lows than new highs. I mean, if it hadn't been for Disney, the Dow would have been up on the day. Disney gave back, I think, 90 points of the Dow, and the Dow being down 10, I mean, it would have probably been up on the day. So it's amazing. Now, the 10 stocks in the NASDAQ that we follow, the Big 10, 7 of those were up. Comcast was down, but Facebook, Apple, Google, Amgen, all of those were, much higher. So that was the reason why the NASDAQ was really strong, on the day. But New York Stock Exchange Index did exactly what we had hoped it would do. It did not break out above the highs that we made just a few days ago, or a week or so ago. And I want to post that one in to let you show you what the real stock market is doing. I know what you're looking at with the NASDAQ and everything looks spectacular and everything, but really the rest of the market is not really doing that well, and somebody is selling it. I don't know who it is for, but maybe it's different this time. Maybe it could be that these statistics are all being manipulated by somebody, and none of these numbers really mean anything. They used to in the past. I mean, you got to have some buying to come here pretty soon to make the market go a little bit higher, and we're certainly not. We're not seeing that in the New York Stock Exchange Index. We've had lower highs, ever since June 20th, and we had our main high back on May 19th, and all we've done is made a 382 retracement here, over the past 2 weeks, which is a very, very weak rally. Now that the NASDAQ has been much stronger, of course, and the S&P's been a little stronger, but the overall broad market is really has not done very much at all. Now, I've had a request to take a look at a couple of stocks that were in the thing. The first one is we've got a setup here. This was brought to our attention by one of our friends down in Florida. And we will take a look at this. This will be the stock of Nike. Now, with Nike, we want to, you'll see here that we have a shooting star pattern where the market gapped up and closed on the lower end of the range. Now, if for some reason that Nike gaps lower today, that is probably one of the safest shorts you're going to have, because you could sell it and then put your stop above yesterday's high, so you'd be risking about a little over a point on a stock that's trading for roughly 117. But that is a very, very bearish pattern, is that shooting star. Now, if it doesn't gap down and it continues to go higher, then the shooting star is not valid. It literally has to gap down. And so I put my limit minder in at yesterday's low, and if it opens there during the time that we're on the air here, we'll look to see if this pattern is kicking in, to see if it's going to do the same thing. We'll wait, let the market tell us if this is going to be one of the patterns that we're going to be looking at. The next one that we want to look at here is the stock of Comcast. We've had a request to take a look at that. Now, that's one of the ones in the New York, in the in the NASDAQ that took a bit of a hit yesterday. It was down a little over 5%, but this is one of those really wide-ranging bars down, which usually suggests that we are going to go lower in the Comcast. As you can see from this chart, that we completed all the big ABCD patterns up there at the 65 level, and now we're trading at around 59 and change. So we'll follow this to see where the next support is going to come in. We also had a request about Apple, and we already know what Apple has done. We went and made that big ABCD down there at the 114 level. We made a low at 112.90, I believe, yesterday, and it rallied $5, which was another reason why we had a pretty good rally in the NASDAQ. But the Dow Jones gave up all of its gains because of what happened with Walt Disney, and then we also had the S&P sell off somewhat, but it's held relatively good support in the S&P, so far this morning. Whether it's going to continue that or not, we want to wait and see if this is going to be the case. Now, the other one that we'd like to watch here is the IWM. We're coming into that this morning. You'll see we have a lot of symmetry here in the IWM. This is a small cap, as you can see here. We've had the top occur, in late June, and then we had the breakdown. Then we had a 7-day rally, and then we had the breakdown to the ABCD, and then now we've had another 7-day rally. And here again was a stock that this index actually, closed lower on the day after taking the previous day's high out, and so that sets up a potential, ABCD structure to the downside, down another 5% from where we are in the IWM. So this is going to be an interesting one, to follow, today. Now, the reasoning, well, that's not the reason. I don't know the actual reason, but nobody else does either. Well, there's somebody is, but they don't tell us. I want to go across the pond here, and just to take a look at the DAX, because we brought this up the other day, and I wanted to bring your attention to it again, because we have just completed a 786 retracement here in the DAX. Give me a second. There we go. And we've also had another 2-week rally here. And you'll see that we've completed it right at the 786 yesterday. And not only that, we made a little bit higher high today, but we're still trading exactly at the 786 retracement as we speak right now at 116.39. The DAX is trading at 116.38. We are up 10 days in a row, 2 weeks, right at the 786. We have lower tops. Well, we had a lower top in May, and then we had another lower top from July. So this is a place where, if you're really interested in selling the DAX, this is where you want to do it, because this is about as low as risk as you're going to get with this many days up. I mean, you have to go back a long time to find out where you've had a 10-day run without any day being down. That's an outlier event, folks. That's on a probability scale. Looking at a distribution curve, it's out into the 98th percent levels. It only happens about 2% of the time. So this is certainly an outlier event. Now, that doesn't mean this thing can't go higher, because it certainly can. It just means that the probabilities are such that right now the odds favor the market to pull back. How much? Don't know, but this is a place where it should have, its metal tested. If it's going to go, a little bit higher, we'll have to wait and see. But we did take out yesterday's high by just a few pennies, and now we're setting exactly at that 786 level, one more time. So we want to watch that very closely. And we have I wanted to share you some information from my personal astrologer, Victoria Martin. And I wanted to just let you see this graph that she brings out each month. Well, it's actually for the whole year. And you can see all the full moons, new moons, and solar eclipses and lunar eclipses, and how they line up. And you can see the harmony that's there. It's really quite amazing to show you how the ephemeris graphs these out and shows you the full moons and the new moons and the eclipses, which are the ones marked in gold. Those are the solar eclipses, and the ones that are red with the moon, those are the lunar eclipses. And so that tells you pretty much, what we're looking at. So here we had one on the 31st of, we had the full moon on the 31st of August. We got the new moon coming up here in just about on the 13th. And then from there we go down into the end of August, where we have another full moon, and then we have the September solar eclipse occurring around the 14th or 15th of the month. So these are guidelines that I use to determine, whether we look at these or not. I posted the DAX into the room, I believe. They're saying that I didn't, and let's just make sure that, because if we didn't, I will do it again. And just give me a second here. Maybe I didn't. That's probably what happened. So we'll wait and see. 1 second here, and we will take a look. We'll take a little break. When we get back, we'll talk a little bit more about the gold.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to move over to the gold market right now to take a look at that. The gold is held up above the 786 ever since the July 24th low 2 weeks ago. Silver has made a slightly lower low than that, but still did not take out the low from last November at 1410. We've made new lows in platinum, and we have made new lows in palladium also, which are, precious metals. The interesting thing is I got a email today from our good friend Rich Anderson at Anderson Capital Management, and he told me that there was another record short interest number hit in the gold market today. More people are short gold now than any time in the last 10 years, and that's what I'm watching is a potential to see when these shorts start to come to cover, and I think you could see $100 to $150 rally in gold without much trouble at all, just from shorts covering. Now, you say, well, that seems rather far-fetched, but if you go back to look what happened, just a few months ago, we had the same thing happen when we went down to the 1130 level, We had a lot of new shorts into the market, and then the market rallied $190 up to 1310. Well, actually, I was 180 to 1310, and then went down and made new lows. So we could still see the same thing happening just because there's so many people that are short this market. And believe me, gold moves very fast when it moves, and the folks there have a tendency to want to run for cover, when the market goes against them. Now, maybe this is one of those times when it just keeps dropping lower and lower, and it's certainly, if you look at the gold chart, there's no reason to be bullish on it because we've had lower tops here all along. We've had some bottoms that have held over since July 24th. We had the other bottom hold on July 31st. And, we're still trading right at that 786 level, which is right near the 1080 a barrel. Wow, 1080 per ounce, and we'll see if that's going to hold. We've got new lows now in the crude oil. We broke below $45, which we certainly expected because the 61% retracement in the oil didn't hold. Neither did the 786. So it looks like we are getting ready to go down and test the level of let me see if I can get this right here. The level of the $42 a barrel, what we had, once before. Now, our good friend Arch Crawford sent me some information last night that I thought was rather interesting, and it just shows the Commodity Research Bureau, the Goldman Sachs Commodity Research Index, on what it's looked like in the markets. It basically shows what's happened during the month of July, this collapse that we had, where oil has broken down, gold has broken down, copper has broken down, and corn has broken down, soybeans have broken down, rubber has broken down. I mean, everything. Lumber has broken down. I mean, there is just a bloodbath going on in the commodity markets, and this is very unusual because if the economy is really that good, there should be some demand coming here and picking it up. And remember, one of the things that Jesse Livermore said, the cure for lower prices were lower prices. That means you get demand finally coming stimulated when the prices are low enough, and the cure for higher prices are higher prices, because if you get prices too high, people don't buy it anymore. So eventually there's going to be a bottom down here in some of these commodities, but to try to pick one here, there's really no pattern to tell you that you're at a potential bottom, with the exception of gold. And all we're doing is we're basing that on, what the open interest is and the fact that there's so many players on one side of the market. That's really what we're looking at. But by any stretch of calculation, if you look at any of the commodities that we're watching, they're all been going down, and not just dropping quietly, they're dropping precipitously. And that's usually a sign that there's not a lot of business being done at those levels. And we had the transportation index has been in a really strong downtrend, and that, just completed an ABCD correction. And so, there's just not a lot of information to tell us that these things, want to go higher. I just don't understand how that the stock market can be where it is, given the underlying structure of the advanced decline line and the new highs to new lows. That just does not make any sense to me at all. And when you look at the New York Stock Exchange Index, it's telling you that there's a lot of selling, coming into the market. That's unless they've changed the rules. Maybe they have. I don't know. I'm the last one to know that anyway. So this is what history has done in the past. If you looked at these things, it told you that there's a lot of selling coming into the market, and you certainly don't want to stand in front of it. But as the market goes higher, what are you going to do? It just looks like it never has a bottom or never has a top to it. And so we'll see, see what happens. We'll come back after these few words, and we certainly want to take to see.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to take a look at a couple of cross rates this morning. First of all, we're going to look at the British pound. We talked about that yesterday, where the market was making the lower highs at the 786 retracement up around that 150, 650 to 156.80 level. We broke down to the 157.60 level today. Let's try that again. We broke down to the 154.65 level, which was matched the low that we made several weeks ago. And we're having a little bit of a rally at that point. Now we're going to review here the euro, because here again we're in a market that's in a pretty substantial downtrend, i.e. the U.S. dollar is pretty strong. And so it looks like, we are going to go down in the next few weeks or days. We should get down to the 107.50 level. That's about 150 pips from where we are right now. There are a couple of cross rates that are just literally, going nuts. And one is the Canadian dollar versus the U.S. dollar. We went far above the 1.27 on this pattern in the Canadian dollar. We've made the 1.414, which is the reciprocal of the square root of 2. And then we are now looking at the 1414 is the square root of 2. The reciprocal of that is 0.707. But we did go up to that level, but there's no reasoning. There's not a pattern here to really to sell it, because once we went above that 1.27, the Canadian said that it wanted to go lower. Now we're trading at 69 cents to the dollar in the Canadian dollar. So the Canadians that come here have to pay up, for stuff that they have. Here in Arizona, there's quite a few people that have bought property in Scottsdale, Phoenix, and Tucson, a few years ago when the Canadian was really at a good price, and the market was really low following the debacle in the housing market, and they worked out pretty good. Now they're trying to sell this, and they're not getting as much as they wanted, for their money. So we'll have to watch that. Now, the other one that looks really interesting from a long-term perspective, of course, in the foreign exchange market is the Australian dollar, because we've made some type of a long-term bottom here, I believe, in just a short period of time here. We have went down to the 72 level. We've had a little bit of a rally from that level, but we're having a little bit of a test now, and we're going to see if we can hold the 72 level in the Australian dollar. Now, one of the things I don't do very often, but I always look, at the weekly charts when you're making new lows, because sometimes there's something on these weekly charts that really jump out at you, and that's what's happening in the Australian dollar, and that is that we have a perfect ABCD down here at 71, and we're trading at 73.41 right now. That's 250 pips away, and we basically had just a 1 week rally here from the lows we made last week, and the last time that happened, the market continued down for another 300 or 400 pips, so we could certainly see that easily. So the best thing to do is to try to find a place to sell the Australian dollar, because the trend, is so strongly to the downside. But once we get to that 71 level, and we get there without any really big gaps or anything, then that's when you want to start to look at the Australian dollar from the long side. And at the same time, that could be where the commodity markets like copper and gold and silver, where some of these things might turn, because Australia is a huge exporter in gold and silver and also copper. And so these are, a few of the things that we're looking at. But we got new lows in copper almost daily, and there's no demand there. And the old rule that copper has a PhD in economics really doesn't hold water anymore, because the market continues to go higher. But it's basically 10 stocks that are basically doing all this movement to the upside. The overall market is not doing that well. Now you have certain stocks. Netflix was really strong yesterday. Amgen was strong yesterday. Microsoft was strong yesterday. These were all stocks, in the Nasdaq, and that makes it going. Now we did talk about Priceline, yesterday, and Priceline opened at $400 a share and sold off, $50 a share, which is quite a bit. So we'll take a look at Priceline to see what it's doing this morning, because if it gapped down today, that would leave an island reversal in Priceline, and so we're going to pull it up and see what we have. There's probably nope. It opened higher, just like all the other things. So we'll see what's going on here, and you'll see the pattern here. Though we did make the ABCD pattern, and now we're having the a little bit of a bounce back after the sell-off yesterday. So Priceline still is in a very strong uptrend. If it closes near the low end of the range today, wow, this has had a heck of a run. This has already rallied back to the 61% retracement on the opening, from a high yesterday at 1405 to the low we made intraday. It dropped 80 points, and we'll just see what we have here. Yep, let's see, that's how much did it drop? Yeah, it dropped 80 points, and we're almost at the 61% retracement now in the price line. This is not well, we just hit it just now. We'll just post this in to let you folks take a look at it here. But this is, I've never traded this stock. I just watched it, but we just went up to the 61% retracement. in it, and we'll see if that's going to hold it at all. But we did hit 14 and change yesterday, and so we'll wait and see if this is going to be much of a mover to the downside, and we'll see what we have going on with some of these other things. Got a little bit of a sell-off here in the S&P and the NASDAQ right now. Now, the NASDAQ yesterday, we brought to your attention the fact that it was probably going to go up. I mean, I didn't think it was going to go up as much as it did, but we did talk about the level of 14. Gosh, Larry, sorry about the mix up in the. I'm not dyslexic. I'm just acting like it. We'll put it up here and we'll let you folks see, because the 61% retracement came in at 1614. Just give me 1 second here, folks. In the NASDAQ is came in at 1614. We took out the highs of the 31st. Now, we didn't take out the highs in the S&P, nor didn't even come close in the New York Stock Exchange Index. I mean, it couldn't even take out the highs of the previous 2 days. So this is a sign that the market, folks, is got a lot of selling coming into it. And when you look at the breadth of the market, unless it's different this time, somebody's selling a hell of a lot of stock. That's the bottom line of what you're looking at. Now, remember, we have the Dow Jones, which is only 30 stocks, folks, and they are price weighted. They are not cap weighted. So, you know, when you have a stock like Disney move like it did yesterday, that's going to affect the Dow a great deal, which in fact it did. We've seen this happen with IBM before, when IBM gapped down, you know, big time. So that's pretty much, you know, some of the things that we're watching right now. So the one other chart that I wanted to bring to your attention that my good buddy Arch Crawford pointed out to me today, and that is a trend line that goes back 50 years. In one of the stocks that he is a really big a really big follower of, and that's Chevron. And I want to bring this to your attention to show you that we've taken out the lows from 1975 on a trend line basis. This is a really, if you like trend lines, you're going to have to like this monthly chart on Chevron, because from the low in 1975, which was the end of the October crash of 1974, the market doubled bottom in October and December. Chevron actually bottomed in 1975. Then the crash low, you'll see, was right on that trend line. That was from the 1987, which was 61% retracement from the low from 1982. You can see the 2003 low. You can see the 2009 low. And now we've broken that trend line. And so if you believe in trend lines, you'll think that this stock is most probably starting a downtrend, and it could go, you know, a great deal lower. So let's just follow that as we go. Well, unfortunately, someone's asked. Just 1 second, folks. I've got a. I want to pull this up here. We've had a request to talk about coffee, which I don't trade very much, but since we have a request, I want to bring it in. And you'll see here that we have we had a butterfly pattern form in coffee 2 weeks ago down at the full moon on the 31st. Now we're making a rally back high. 1 second. I'm going to sneeze here in a second, possibly. Hold on. Oh, maybe not. Anyway, we've made some type of a bottom. We tested the bottom at the 786 back last Friday, and now looks like we're making an ABCD structure up around another 5 cents in coffee, up around the the 130 level. So those are some of the things that we're watching here that look interesting from the perspective of technical analysis. So we want to kind of keep an eye on that. The other thing is I hope everybody watches the debates tonight. I think these are about the most anticipated debates that I've heard in a long time. I know Donald Trump is getting a lot of flack because he's not a politician. Folks, we elected a president that never had a job before. I mean, Obama he always been in the political party. He had never had a job. He wasn't a teacher. Sure, he was a two-term senator from Illinois, which is like being a yard boss at a prison. But, maybe we need someone that's a non-politician to come in and shake things up. Frankly, I believe that we should, I'm going to be on my soapbox for a couple seconds here, but I believe we should be on a flat tax. And if we had this flat tax at 14%, all of the drug money would come out of the woodwork, and our economy would probably be stimulated beyond belief. And at least we could get rid of the IRS, and everybody just pays as they go, and make corporations pay. They can't be moving offshore like this, and that's not fair. But that's it. Who knows? That's the thing. Somebody just mentioned Mr. Bill in the room says, how many times has Trump left investors holding the bag? That's true, but that's just like the politician. They do it 100% of the time. So at least once in a while, Trump does get it right. But I'm sure that, this is just a big smoke screen that they're getting ready to do something different because, nothing really changes, I guess. It should, but it doesn't. I'm just more upset about Kermit and Miss Piggy than anybody else is probably, but that just doesn't make sense that they would do something like that. The next thing you're going to know is Big Bird's going to have a sex operation because he can start laying eggs again. That's probably the next step that they're going to use to try to get viewers back into the fold of the of the Sesame Street characters. We'll have to wait and see. We know what's going on with this. Okay, got a little bit of selling in the market, but not very much, and we'll see what's going on here with some of these things. We did make a little, very small Gartley pattern here in the S&P this morning, before the market opened, and that tells us it's going to be down to maybe the going to be strong support at the 2085 level, I believe, in the S&P, most probably. We'll see. But we did make a little bit of a Gartley there this morning. This was the same Gartley that we were looking at with the DAX. And believe me, they trade almost tick for tick. When the DAX goes up, the S&P goes up. So that's the main thing to keep an eye on here. Okay, now the next question that someone had was about silver. So let's pull up the favorite metal of Clayton Moore, and anybody remembers who that is wins a prize. And Clayton Moore, is William Tell Overture. That was the Lone Ranger. And as you can see here, we will be looking at old Kemosabe's favorite here. And there we go. Jay Silverheels, he was Tonto. His name of his horse, boys and girls, was Tonto. And, okay, I'm going to give you one other one here is what was the name? I shouldn't do this. This is a stock show. I was going to say, what was the name of Dale Evans's horse? Roy Rogers was Trigger, but what was the name of Dale Evans's horse? Does anybody at TFNN remain? And I'm not on medication. I'm just no. The Trigger, but Dale's horse was Buttercup. Buttercup, not Buttermilk. Buttercup. Anyway, that's okay. You still win a prize, Marshall. You're really close. So we'll see what happens with that. Okay. Let's just talk about the bonds and notes here, because I think that we had the bonds came down and stopped exactly at the 61% retracement to almost to the exact tick from the low we made 5 days ago, which tells us that this trend is still hasn't gone down, and now we're having a little bit of a counter trend rally, which should get us up to that 157 level one more time. The difference is, folks, is that the notes look so darn bad. We'll be right back after these words, and we'll be back in business.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
The interest rate era, we had, if you realize that we had a little bit of a breakout here on the upside, turned out to be a false breakout in the Treasury notes. You can see we're in a downtrend for the last 6 months. And if you go back and look at the last year and a half, we're still in a downtrend, and interest rates are going to go higher. And it's just a question of when, not if. And I don't know why they're prolonging it, because they certainly have a good reason to reduce rates here with the fact that, increase rates here with stock market being, near all-time highs in some of these indices. And I don't know what the game is that they have going on, but it's far beyond this boy's pay grade. But anyway, the notes do look like they want to go lower. We've had a 2-day correction. We're going to see if it has a little bit of a bounce from here. We went down to the 786 of the low of last week. We made the 61% retracement in the Treasury bonds, but the notes made a 786. They've been the weaker all along, so we're following this one with a great deal of anticipation. We still believe the euro is going down to the first stop is 107.50. After that, you'll be looking at the old low that we made back in March at 104.50, and below that, then you're looking at something, really, really sinister, to the downside. So we have Nike is now taking out the low of yesterday, but it's not a gap down, so it's not an island reversal. It's still a shooting star pattern, but we just took out the low in Nike. Whether that is going to be indicative of anything happening, we're getting close to the 2085 level in the S&P, which should be some support, but below 2085 is going to make the market look a little bit lower. Folks, they threw everything at the bears that they could yesterday, and the bears didn't come out too badly. I mean, the Nasdaq was still up on the day, but the Dow was down. The S&P was only up marginally. Some of the key stocks were down. Comcast was down. A few others were only up just slightly. So this is what we're looking at, folks. So live every day in an attitude of gratitude and do something nice for somebody that has less than you today.
Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today.